Hi everyone, welcome back to Monday Morning Mortgage Minutes. I'm Nathan.
I'm Scott.
And here we go.
Good morning, welcome back again. We're here with Brenden from Finance of America. Thanks for joining me as always. Thanks for joining us as always, I guess I should say.
Yeah, absolutely.
So, there's a lot of volatility right now. Interest rates go up a little bit, they go down a little bit, they continue to go up. How does that affect someone that already has a mortgage? And also, how does it affect anybody that's still trying to get a mortgage?
Okay. How does it affect someone who already has a mortgage? Well, unless they're on a variable rate mortgage, the current market volatility won't affect them.
Okay.
Because they got one.
So they're locked in already.
Absolutely.
In other words, at that point. Okay.
Yep. Well, that's your typical 30-year, right?
Right.
It's called a fixed mortgage because the interest rate is fixed.
Fixed up.
Now, how it affects your potential buyers, depending on your pre-approval letter, that interest rate could be lower or higher than the current rate.
Okay.
We don't lock until we have the agreement of sale in hand, unless they use our live and lock program, where we'll lock for 90 days, give them 60 days to shop with a 30-day close.
Okay.
So there's always that option.
Okay.
But back to how it affects the payment and all, mortgage payment is broken down into PITI, so principal, interest, taxes, and insurance, right?
Okay.
The four things that make up your mortgage payment. The principal and interest payment will be higher with a higher interest rate.
Okay.
So that could be as little as $20 or as little or as much as $100, right? You know, and don't quote me on those numbers, things change all the time. But just to give you an idea. So that's it's the difference between the monthly mortgage payments, right?
So, to tag on to this, we talked about adjustable rate mortgages a couple weeks ago. Does this affect adjustable rate mortgages, or is that locked in for a short time period and it will not change it? So it's normal. So it's like a normal loan at that point.
Gotcha. Yeah. So for those of you who have ARMs out there or who are looking into ARMs, typically the what's that called? The terms of the ARM is 7, 5, or 3. Your interest rate is actually locked in for 7 years, 5 years, or 3 years.
Okay.
Right.
Wonderful.
And again, there's millions of loan products out there. So just talk with your mortgage professional and your real estate agent before making any, final decisions on things.
Wonderful. Thanks as always for joining us. We hope that helps answer some of questions like that. Any questions, reach out to Nate, myself, Brenden, any loan officer you're working with. We all would be more than happy to help you. Thanks so much, and we'll see you next week.